Hello, and welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today is October 13th, 2025, and we're breaking down Intel, symbol Intel. The stock has been on an absolute roller coaster, with a mix of incredibly bullish news followed by a sharp, bearish reversal. We're going to dive into the news driving this price action and then jump into the charts to see what they're telling us. First, let's talk about the recent headlines because there's a lot to unpack. The bullish case for Intel has been building for a few weeks now. Around mid-September, investors were thrilled by news that Intel sold a majority stake in its Altera chip business for $3.3 billion. This move was part of a broader strategy to cut costs and streamline operations, leading the company to lower its full-year expense forecast. The market loves financial discipline, and this news was a major catalyst. Adding to the optimism, just a few days ago on October 9th, Intel debuted its new Panther Lake processors, built on its advanced 18A technology. The company claims this gives them a competitive edge that rivals currently can't match, positioning this as a key part of their turnaround strategy. However, the story isn't all positive, which helps explain the recent pullback. Bank of America recently downgraded Intel, citing significant competitive concerns. This isn't surprising, as rivals like TSMC, Nvidia, and AMD continue to dominate key areas, especially in the AI space. There are also broader industry worries about the supply chain and questions about whether Intel can consistently execute on its ambitious roadmap. So we have this classic battle between a company's turnaround story and the harsh reality of intense market competition. Now, let's bring up the daily chart for Intel to see how this narrative has played out in the price. Looking at the full picture, we can see a stock that has been through a major downtrend for a long time. It carved out a significant bottom back in April of this year, hitting a 52-week low of just $17.66. From that low, we saw a slow and steady recovery, with the price grinding its way back into the low $20s. However, notice this massive gap down in early August on monumental volume, which took the price from around $29 all the way down to $21. This was a catastrophic drop, likely related to a poor earnings report, which completely erased months of gains. The stock then based for about a month, building a cause for its next move. And what a move it was. Starting in mid-September, right when the Altera and cost-cutting news hit, the stock exploded to the upside. You can see this massive price gap up on September 18th on enormous volume, rocketing the stock from the $24s to over $30. This rally continued aggressively for 2 weeks, pushing all the way to a new 52-week high of $39.65 just last Friday, October 10th. Let's zoom in on this recent action from mid-September onwards to get a better look. This chart shows the sheer power of that news-driven rally. The volume on these breakout days, particularly September 18th and September 25th, was truly massive, confirming strong institutional buying. The move from $24 to nearly $40 in less than a month is parabolic and often unsustainable without a pullback. And that's exactly what we got on Friday. Look at this last candle for October 10th. This is a very bearish candle. It's what we call a bearish engulfing or an outside reversal day. The price opened higher, made a new 52-week high, and then completely reversed to close below the previous day's low, all on very high volume. This indicates that sellers took firm control at those higher prices, and it's a significant short-term warning sign. This reversal aligns perfectly with the timing of the BofA downgrade and renewed competitive fears. Now let's switch to the 1-hour chart to analyze Friday's sell-off in more detail. Here you can see the price gapped up at the open before the selling began immediately and relentlessly throughout the entire session. There was virtually no bounce, which shows the urgency of the sellers. The price is currently sitting right on the low of that day, around the $36.30 level. This now becomes our most critical immediate support level. A break below this would signal further downside momentum. Short-term resistance is now the midpoint of that big red candle, around $38, and of course the high at $39.65. Switching quickly to the 15-minute chart of just Friday's trading session hammers this point home. You can see the peak right at the market open and then a waterfall decline for the rest of the day. Notice the high volume spikes on the candles that broke below key intraday levels, like $39 and $38. This confirms the strength and conviction of the sellers. The session ended with the price trying to stabilize right at the low, highlighting how crucial that $36.30 area is for the bulls to defend come Monday morning. Okay, let's go back to the daily chart for our final summary and predictions. To recap, we have a clash of narratives. The bulls are betting on the turnaround story, driven by cost-cutting and new technology. The bears are pointing to intense competition and a very ugly reversal candle from the 52-week high. So, let's outline the key price levels to watch. Immediate, critical support is at the recent low of $36.30. Below that, the next significant support area is around $34.50, which was a prior consolidation point. The most important support, however, is the top of that massive breakaway gap, right around $31.75 to $32. This is the line in the sand for the bulls. Holding above it keeps the recent breakout structure intact. To the upside, resistance is now at $38, followed by the major high at $39.65. Now for some unbiased scenarios. A bullish scenario, which I'd give about a 40% chance right now, involves the stock holding this $36.30 level and starting to build a base. If it can consolidate and then reclaim the $38 level with conviction, it would suggest the pullback was just healthy profit-taking and a retest of the highs is likely. Positive market sentiment or more good news from Intel would reinforce this. The bearish scenario, which I see as more likely in the short term at around 60%, is that the selling pressure continues. A break below $36.30 would likely lead to a test of $34.50 pretty quickly. If that level fails, a move to fill part of that huge gap down to the $32 support level becomes a very real possibility. Weakness in the broader market, especially the tech sector, would make this scenario much more likely. Keep an eye on upcoming earnings reports and any news regarding semiconductor demand and the competitive landscape. That's our in-depth look at Intel. This has been Explain the Charts. Thanks for tuning in. Please remember, this video is for informational and educational purposes only and should not be considered financial advice. Always conduct your own research and consult with a financial professional before making any investment decisions.